Welcome back to the channel. A lot to unpack, a lot to talk about this week. Please don't mind my voice, just coming over a cold and still feeling a little congested, as seems like there's a virus running around right now. It's been ripping through a lot of people that I know, but nonetheless, Mark Carney's most recent visit to the Oval Office, his first visit as the official Prime Minister, the elected Prime Minister of Canada. Ultimately, I want to get your thoughts on, first and foremost, what you thought about that interaction between Carney and Trump. I mean, for those that elected Mark Carney to be the voice and face of Canada, to represent them and stand up to Donald Trump, well, I don't think that really was showcased at that particular meeting. Maybe we'll see some different tones from Mark Carney, seeing what happens sort of as we continue on. Now, I digress, like talking about this particular conversation around mortgage renewals. This is a big topic, one that we've been focusing on the channel, especially for a lot of our clients that are approaching mortgage renewal in 2025, 2026. And with the most recent data in the real estate market for the month of April, what we're seeing is a lot more inventory coming online. I think there was an 8% more inventory that popped up for the month of April. And ultimately, we're seeing sales sort of slip. So a lot of homes staying on the market a little bit longer, depending on the type of product. I mean, ultimately, this is a bigger picture. Averages, ultimately, some markets might move differently. Why is all this important, especially for Canadians that are renewing? You might be saying, well, I'm not buying. I own a home. I'm happy where I am. My mortgage is coming up for renewal. Why are you talking about home prices? Well, obviously, as a homeowner, most people do track what's happening in their area, especially as you're approaching mortgage renewal. A lot more clients are coming to us now saying, hey, we racked up some debt. We have, need to consolidate. So one person was off work, more mouths to feed, less income coming in, maybe some expenditures that were unforeseen, some repairs, some things that need to happen to the home in order to retrofit it or make it more inhabitable for the people moving in, parents that are aging, all kinds of stuff happening where people need to use their lines of credits or credit cards. And now those higher rate credit cards are starting to catch up. And a lot of money is being hemorrhaged that way. So clients are like, well, my mortgage is coming up for renewal in 2025 or 2026. So I'm going to refinance when my mortgage hits maturity. And a lot of clients that are starting to get into that plan right now, we're starting to reach out to our clients, saying, hey, if your mortgage is coming up for renewal, let's get in touch. Even though we may have a long runway, let's get it diarized. Let's start the process, because what we need to do is figure out where you are in that equity. If you bought that home a few years ago, I would say after 2022 and a half, 2023, 2024, and you basically went in with, 10, 5, 10, 15%, depending on your location, 20% down, there might not be enough equity in the home to refinance that mortgage to pay out some of those debts, unless you've done extremely large prepayment and you've built in that equity. But there has to be enough equity. There has to be about 20% of equity left in the home in order to refinance. So basically it's an 80% loan to value, right? So figure out what the price of the home is and, take out 20% from that. And that is the maximum mortgage that you can get on that home based on that value. And then you have to qualify for it. That's the other thing as well, right? Understand the qualification. Because you're refinancing that home, if you're looking to pay out those debts, or maybe you have a line of credit, you want to, add that line of credit back into the mortgage so you don't have multiple payments, you need to qualify. It's not under the stress. It's under the stress test, not bypassing the stress test. Remember, if you're switching from lender A to lender B and all the parameters stay the same and it's from a federally regulated bank, you can do the switch and transfer at the contract rate, whatever that discount rate is that you're getting, whether it be fixed or variable, you can do it. If you're going with a line of credit, it has to qualify at a higher rate, right? Generally, the algorithm is prime plus half, depending on what the lender's offering, plus the 2%. So it could be substantially higher that you're qualifying on that line of credit. Anyway, with that being said, obviously you can see there's some hurdles that clients could be facing depending on their income structure. But the biggest hurdle, one that cannot be remedied by adding a guarantor or co-signer, which is what some people are looking to do, is the equity in the home. If there's a value's not there and appraisals aren't coming back, there's nothing that people can do. There's nothing that a lender can do. Now there are options. Some people are like, well, what if we went to a private lender, so on and so forth, which I don't advise, but most private lenders won't go to 80%. Some of them will, right? At a certain cost, higher rates. Some of them prefer to be below 80%, 75, even lower than that. at much higher rates than you would be facing with your conventional bank. So you have to understand the risk to reward in that particular option. So why is all this important? Man, if I bought my home, I put 50% down. I have a lot of equity in my home. Then it may not pertain to you. This conversation is geared to those who maybe are approaching renewal. They had their mortgage. Maybe they bought with an equity lender. We're seeing it firsthand. This is the reason why I wanted to discuss this, because most clients, they'll wait to the last minute. They really won't consider. They'll say, "Hey, I'm going to refinance when it's time, and then I'll pay out my debts and so on and so forth." But what happens when you get to that particular juncture and the home value has come off in the last few months, right? If we're seeing this slow and steady burn, this controlled burn of price depreciation or deceleration, where does that leave you in your home, right? And you may not, be worried about the price of your home because you're staying there for the rest of your life. But if you're looking to pull out the equity from that home and it's going to change your dynamics in your family's budget, then you really need to consider maybe looking at your options now and gauging what that's going to look like in the next 6 months. Because if the home price is X today, it might be significantly lower, could be significantly lower. Not saying that it will be, it's a possibility, right? We have to understand we don't have a crystal ball. Nobody does. So if that home value is significantly lower 6 months from now, and you had the ability to restructure your mortgage now, pull out the equity, yes, you may be forfeiting a better rate. You may have to pay a slight penalty to get out, depending on the lender, and obviously speaking to your mortgage professional about what is best. So understanding where you are right now, understanding your renewal. If you're approaching mortgage renewal in end of 2025, 2026, and you're thinking about that debt, you're thinking about those situations, understand that if your home price, if the price of the home right now, based on the market and the mortgage amount, if it's above 80%, then you really can't refinance the home. If it's just below the 80% mark, then you might have a little bit of equity. If you're not able to do that and pay out the amount of debt that you need, then you're running into another set of problems. And this is something that we're seeing a lot more frequently. Lot's happening a little bit more and more as Canadians are trying to, get ahead of their debt, or at least trying to manage it a little bit better. And that's something that you need to pay attention to. So let us know your thoughts on, the current market right now. Are you in a position right now where you're looking to refinance? Are you looking to buy? What is your take on the current events, so that we can help formulate and give some advice to some of our clients out there and give some advice and information to our viewers. And remember, always speak to a mortgage professional. Talk to someone, get an opinion on what the options are, what you should be considering before making a move, so you can sort of plan that next step. But we'll leave the video here. Wishing everyone a wonderful weekend, and hopefully everyone subscribes to the channel, leaves their comments, but we'll all see you next week. Thanks for stopping by.